All right, good evening, everyone. Welcome to the trade findings and adjustments for Tuesday, June 23rd. My name is Kevin Hurley. I'm going to be with you today, and I've got three things I want to talk about. Three things that are directly related to how to be successful as a trader. Collar trading is more of investing. If you want to be a successful trader, here are the three keys that I'm going to give you. And part of that is also related to collar trading. But number one, I made the comment that it's time to be patient when it comes to putting more money to work. And I made that comment, 2 weeks ago. I just plain and simply wasn't sold on where the market's at. And I still made the suggestion that there are two ways to play Boeing's run up. If you want to play resistance, you could put a January 22 275 call on for $36. If you want to do a long-term rebound, you could do a 380 to 400 June 22 for $36. Let's take a quick look and let's see where, let's take a look at Boeing, right? If we were to pull up Boeing, it's languished. 234 down to 187. It was an up day yesterday, a doji today. Probably going to go back and test that 181. Probably going to go test the R2 resistance level. So, if I was looking at Boeing, I'm just going to pick one of these. Let's see how I'm going to do this. Give me a second. If I was going to look at one of these, orders, trading, let's get an options one. We'd be looking at Boeing, January 22 and June 22. If we're to look at a January 22 now, up at 275, your quote is now 26.27. So plain and simple, by being a little bit patient, by not forcing a trade, the position that was $36 2 weeks ago has basically lost $10. So 2 weeks ago, should say 2 weeks ago, if you want to play, you could be at 36. Today, you can get into the same trade at 26.30ish. So the 3 trades when all they're going to do is run bull calls over and over and over again? Why would they be putting bullish trades on in a bearish market? I was shocked. I was shocked that she was pushing a trade out 3 times a week in markets that just cost everybody, for all intents and purposes, it cost them all kinds of money. And I don't understand it. I just don't understand it. So pretty interesting. Right now, that same trade that we were looking at is now significantly cheaper. It's ridiculously cheaper. And if you look at the chart, it's nothing more than saying, hey, we're going to wait for an up day. And I could have put it on down here at 166. Wasn't sure. Couple days bounced up, almost put it on, went up to 208, thinking, oh, I got to put it on. Little bit of patience, and it saved me $10. Could I have got in for even less right here at 106.01? Most definitely. But if I got in today, I'd feel like I had saved myself $10 in the trade. If we were to switch this and look at the June 22s, and I think out here we are looking at $300s. $27 is the midpoint, $26.30 possibly. So as I take a look at this one, for me, it's a no-brainer. It's like, you know what? I took a little bit of patience and it saved me $10. Now, here's the difference again. Someone is going to say, but Kevin, you could have got in at 166.01. And yes, if I had a crystal ball, I could have gotten in at 166.01. But in real life, I'm getting in $10 cheaper than every joker that would push a trade and say, oh, go put it on. I'm getting in $10 cheaper by saying, you know what? I'm going to wait. I'm going to wait. I don't have what I'm looking for, so I'm going to wait. And this is going to be the difference for Hurley Academy and every other trade advisory that's out there, where they're going to be pushing a trade on a single day, on a single every third day. I mean, there could be all kinds of things. When in reality, if the market was so automatic, then plain and simple, you don't need to think. You can just be putting on trades, and it's an ATM machine for you. Now the comment was Ida, but it could have gone the other way. If Boeing had increased in price the next day, like I told you Tuesday, I would have gotten in the trade. So it's a good question, but it could have gone the other way. Again, the next day, if it had gone up, I would have gotten in the trade. The difference was, plain and simple, The difference was that it didn't go up. So guess what? I sat back and I was patient. And I've still been patient for the last 2 weeks. And it's nothing more than finding an entry point. If it had gone up, we would have went in it. We would have went up for a day and maybe it would have pulled back. That's why I've got my secondary exits listed there. But the key on this trade was time to be patient when it comes to putting money to work. If it was a down day the next day, I would not put on this trade. And boy, it kept going down. So all I'm going to tell you is it's now time to most likely put on this trade if it goes down and tests that 180. But either way, by putting it on now, you're going to save $10. So number one, patience. When you have a big run up, it's time to be patient. Number two, don't give all your profits away by continuously rolling long puts. Let me give you an example. We're going to talk about Apple today. My trade is going to be on Apple. Apple has made a pretty good run. And it started off at 320, and your first resistance level is at 333. So let's take a look at Apple. And looking at Apple, if we were out to a July 24th, we would have been somewhere in here. Currently trading at 366. So to get a general idea, you had your monthlies on 366. Lost 420 today. And when it was closer to at the money, 433. So plain and simple, for a run up from 320 up to 332, you would have lost roughly $8.60. To then spend another $11, $10-ish to purchase another set of long puts. And this is where you do the math a little bit. If you're going to protect $15, but spend $19 to get there, so you're always protected, is that how you're going to make money trading in a collar trade? Let me say that one more time. If you lose $8.50 and then add more long puts for $11, equaling $19.50 to now protect an additional 15, are you making money? The numbers are going to tell you, net, I'm spending $19.50 to protect 15. Now the question will come back again, but Kevin, I know it's going to, right? But Kevin, what if it goes the other way? What if it goes down? And yes, it can. I understand that. But mathematically, when you're bullish and you're rolling to 3 or 4 strike prices up above, the math doesn't work out. And if you take a look at the chart, it's bullish. My question would be, why the hell are people putting on bearish positions on a bullish moving stock? We wouldn't do that in a spread trade. You should not do it in a collar trade. You're giving away all of your profits. And if you keep adding up, a lot of people today were like, hey, I rolled up to 360 from the 350. And again, I just scratch my head a little bit because plain and simple, the numbers don't add up. If you had kept rolling this month, you are upside down on a 320 on a $46.50 move. You basically have spent $55 to get there by rolling those long puts. So my comment, just like in spread trading, follow the trend. Technical analysis and stop. All right, sorry about that. I just lost my audio. A comment was just made. If price goes up, you suspect it might reverse. I would just follow the inverse IV behavior. Almost always is leading comparison. Yeah, I mean, a little common sense again is all I'm going to say. I'm going to say that nicely. A little common sense is needed when you're trading positions. I just had someone talk to me here, though, recently about how they're always rolling and they can't seem to make any money. And I've also had someone else talk to me in the past about it. But yes, plain and simply, if you keep rolling your long puts over and over and over again, every 2 to 3 strike prices, mathematically, you cannot make a profit. You have traded your profits away for overprotection on your stock. But Kevin, what if it goes the other way? Let's take one more look at the chart. And I'm not saying it's easy. Kevin, how would I say it? Kevin, on this day, it scared me. Now I could understand from 320, $28 higher, why you might have added long put protection. On a doji, on maybe 3 or 4 days in a row, from 320 up to 350, $30, 6 strike prices higher. I could get it. We had it on in this time, but we took it off again. There are times you have to let some stocks run. But Kevin, it's totally overbought. But whoever just asked me that question, it's run for 8 weeks overbought. And it's run right here from 270 all the way up to 326, which is $56. I get it. I get that sometimes trading in the stock market is difficult. But again, if you believe or use any technical analysis, if you do any research on your company, if you understand or spend the time to get to know your stocks and learn how your stocks move, not saying it's right every single time, but this is how you don't waste your profits on puts. I love where Apple is trading at right now. If you were to ask me the trade I would do, it goes right back to the one I mentioned the other day. Apple, I love it. I love it, and it had 3 more upgrades today. Why does it only show one? Jeffrey's on the 19th, a buy. So let's just go the last 6. Well, let's go the last 7 because we have June 11th in there. What an opportunity you have on a stock that has moved significantly. What an opportunity you have on a stock that should still move more. Pretty interesting. Someone brought up to me, hey, what about the fact it's already moved so much? That's where a leap comes into play. But basically looking at the last 2 weeks, Deutsche Bank reiterated a buy. HBC went from reduced to hold, an upgrade. No price target increase. Citigroup, someone that's important, a buy up to 400. Wedbush, that's not important, outperformed 325. RCB Capital Markets outperformed 390. Jeffries, a buy to 405. I don't know who Cohen is, outperformed 400. UBS, a buy to 400. Basically, you have the call on Apple's next move, what it's going to do, what price it's going to go to. You have it right here. They are dictating where Apple's going to move to. So if I was looking at a new trade, a trade I could get in today, I would be looking at Apple, and I want to play that run up to, I want to play the run up to to 400. It's going to be a rather short-term run. Doesn't mean it can't go higher, but plain and simple, I want to play that run to 400. I'm going to go out in time. There are a couple ways you could do it. If I want to be cheap and I'm just going to play the run to 400, I'm going out to I'm probably going out to a 380. 380 for $51.50 is where I would be looking to place my trade. I just want to play the run between now and 400. Kevin, it was up $7 today. Yeah, but it was up 11 or 12 or 13. I mean, in all honesty, I know how high it was, but it could have been higher. And it fell away a little bit. Comment was made, but Kevin, it has its WDC meeting, right? It's always a sell the news. Guess who's not at their Apple meeting this year? People. Guess what? If it's a down day tomorrow, am I going to place the trade? If it's a down day tomorrow, am I going to place this trade? No, there you go. Thank you, Maud. Thank you, Lance. Thank you, David. No, I'm not going to place the trade. Could we possibly already be in this trade for a couple people? Or something similar to it? Of course. Some of you got into it yesterday. And some of you have been in it for the past couple of weeks if you're going to be called out. So some people, where I'm looking at some cash, plain and simply, 13,380 calls, we're in for 49 or up to 51. These will most likely get evaporated out when it's around 400. We have a couple January 400 calls, 41.97 and 42. Those will evaporate. We have some longer out in time, September 22, 14 here. It's $60 that are worth 65. Half of those will evaporate. So an opportunity to continue to play Apple's run, a January 22. It seems like it's going to have a heck of a run. That's the best way to say it. There still seems to be a pretty good run involved in Apple. And I want a piece of it. I want a piece of this Apple run. If I'm going to be more long-term, I want a September 22. And I would probably go out. I'd go out to the 400, and I would run this one at to September 22. Difference between the two trades. Why would you do one over the other? And here's the simple comment or the simple answer on it that I would have for you. It really comes down to nothing more than take the January 22 if you will will be planning to exit the position at 400-ish. If you're going to do that, that's where, plain and simple, no questions asked, you're going to take this one right here, the 5150. But for a longer term investor, for a worried about overbought, for someone who wants more time at the cost of $1.50 for another 9 months, September, right? Can you see which one I'm kind of leaning to? If any of those comments sound exciting for you, for crying out loud, go out to the Septembers. Now, one contract, $5,300. It is a more expensive trade. There is no question about it. A more expensive trade is going to be the Apple. But for $1.50 more and 9 more months, a September 22 400 where it's looking to get to either way is where I would go. Now, a couple things to check, right? Delta. Why did I just do that? Let's try this again. Let's be a little smarter. Let's try this one more time. Let's go to options on Apple. January 380, I think we chose, right? Your delta on the 380, 0.54. That is definitely not a bad delta. That is playable. That is doable. That is a good delta. Now, it's going to take a while to kind of get there, right? It'll take a while to get there. I like anything above 0.50. And you're not going to make 54 cents out of the gate, but between the next $34 or $33.50, you can definitely make 15. 15 on a $51 investment, not a bad return on investment. It'd be around 30%. If you go out to the September 400s, 0.51. I'm talking myself into September 400s. It just seems to be, for me, an absolute no-brainer. I like the extra time. I like, I just like everything about the trade. When you get 4 upgrades and a price target all around 400, I'm going to tell you that's where Apple will most likely go. So my trade for the day, I'm looking to put in for myself a September 22 400 strike leap long call. It says quantity 10, plain and simple. $100,000 account, put one of them in. A 250, put 2 in, knowing you could go up to 4 for dollar cost averaging. A $500,000 account, go ahead and put 4 in, knowing you could go to 8 to 10 for dollar cost averaging. So be careful that you're not over leveraging your portfolio, because let's face it, this is a more expensive trade, but what an opportunity. And in all honesty, September 2022, I wonder how many days did that say that was? 815 days. Knowing Apple, it could be at $800 by then. It could be at $775 doing a 10 for 1 split. I really like the opportunity that we have here. Any questions for me? I know I threw a lot about you today. Any questions? Oh, sorry. Number 3. Don't be afraid during bull runs to leverage your money. Any questions? You guys are all going easy on me, huh? Amazing, amazing opportunity. You see Apple to get these upgrades and to have an opportunity to participate in Apple for as little as $5,300, when 100 shares would cost you, geez, ridiculous, 36,000. Again, don't do 10. Make sure you change that to 1. But 365 times 100, yeah, 36,000. Can participate in Apple for 5,000, 50, 100, 5,300. Any questions at all about anything I said tonight? If not, I'm going to wish you guys a good evening. My account does not have this trade in it yet. But I appreciate having you guys here. This is a great trade to do in a IRA account where you don't pay taxes on it. What about a diagonal to reduce the cost of the long call and 815 days later? So the short answer is you absolutely cannot get caught getting whipsawed. You can absolutely not get caught with the stock falling, then bouncing back up again. So Abraham, I wouldn't be shorting this. I did short some before when we had some technical crossovers, and I might wait till a technical crossovers to put a short call on it. But I would absolutely want to take that off. And when a stock moves as much as Apple has, when you're looking at a stock with this kind of movement, think about all the people at 300 that thought 320 was safe. And, you know, oh, we're good. All the ones at 265 that thought 300 was safe a month later. All the ones at 235 that thought 250 was safe. It's not really. It's a tough one to short and not get caught with your pants down. Not get caught having it run above that short call strike price. So it's a tough one. It'd be a tough one for me to short against. It would need some really bad news and have to be heading down the other way for me to want to short it. So I would not be doing a short call. It clearly needs more close management to short. Perfect. Yes. It's more of you got to watch it every single day when you put on a short call on it. Great questions, Abraham. Any other questions that anyone has? With that said, guys, have a wonderful evening. I hope you learned a little something today about those long puts. I appreciate having you guys here. Remember, we'll be out next week. For Monday, I will be in charge of the commentary. Tuesday will most likely be Keeve. Thursday, we will we'll have pre-recorded the night before, most likely. And then the week after, we're going on our little vacation. Keith told me he threatened to quit if he didn't get a little time off. Okay, he didn't. It just sounded good because I know he's listening. So the next week, we'll do the best we can to do some pre-recorded where you'll have to run to My Hurley Investment to hear it. You guys have a great evening. Appreciate you being here. We'll look forward to a question and answer session Thursday morning. Please take the time over the next 2 days to write down your hard questions. Thursday is just a question and answer. Some people said, hey, we'd like to do a question and answer with me. Apparently you guys really enjoyed what Keith did last week. So Thursday is a Q&A. Bring all your tough questions to the webinar. Talk to you then. Have a good evening, and we'll see you Thursday. Bye-bye.